Headlines, headlines. The real estate market is crashing. This looks like 2008. Interest rates have paralyzed the market. What does all this headlines mean? It's Mark Gellman, eXp Realty, the Gellman team. These headlines are fake news. I'm going to give you some statistics. June over June and June this year versus June 2019 that will tell a completely different story from in the field, what is happening, that we see absolutely no indicator that the market is going to crash. Doesn't look anything like 2008. Active inventory today versus 2019. St. Louis City inventory levels are down 41%. In St. Charles County, inventory levels today versus 2019 are down 50%. And in St. Louis County, this June versus 2019 June, down 60%. These are huge, huge numbers. We have an inventory issue right now. It is a severe seller's market. If we were to back up to 2008, the numbers today would be versus 2008. 2008 inventory levels would probably be somewhere in the neighborhood of 8 to 10 times what they are today. So now that we understand where the actual inventory levels are, when you look at sales units are down in the city 24% year over year. They're down in St. Charles County 23% year over year, and in St. Louis County, they're down 21%. Does that mean the market's crashing? Absolutely not. It means there's just not enough inventory to support the demand, because the demand is creating multiple offers over asking on the great majority of properties. Those properties that are sitting have a condition issue or a pricing issue. And again, a pricing issue is related to the condition or other factors. Once those homes get repriced, they're selling. Last thing I want to note is that when we look at prices, though, it's very interesting. Units are down, severe seller's market, but prices have stabilized. We are seeing significant demand, but we haven't seen a significant bump up, because year over year, when you look at what happened this time last year, prices in June were incredibly high because they were May under contracts, closings in June, right before the interest rates bumped up. Now, when we look at price increases in July, I expect those to look a lot different this year versus last. But June last year was still extremely strong because, again, May sales. So it's a really interesting market that I don't see is changing at all, unless we were to have a bump up in inventory, which I'm just not seeing. If you're a seller or a prospective seller, I say get your home on the market, because we know what is happening in today's market. If you're a buyer, interesting time. You certainly have to have the appetite to participate in today's market. If you want any information about buying, selling, investing, the value of your home, don't hesitate to reach out to us. But those headlines, they're fake news.